the Taiwanese index. That one is up around 0.8%.
The UCPMP is a unified codal framework.
There is no, restriction on import from China per se.
20-day then comes in at about 22,200. And you got the 40-day exponential moving average, which comes in at about 22,019.
Because it's the 22nd month where Reliance Jio subscriber addition tops that of its peers.
It's absolutely flat. I mean, 10 points lower on the Nifty is what we have. We are at 22,440.
Auto ancillary exports. I mean, that is one space which looks very exciting.
So, Trav, overall, this month we've clocked about over 6,000 units.
There's an increasing view here that long-run rates in the US may not be 2.5%.
But even today, we're holding on to about a 2:1 advanced decline ratio, and there are so many individual stocks which are flying around.
Madura Fashion and Lifestyle, which will hold brands like Louis Philippe, Van Heusen, the underwear business out there, Peter England.
Tata Tech has entered into a joint venture partnership with BMW.
Ministry of Civil Aviation as well as the aviation regulator DGCA, both of these bodies have stepped in to address the Vistara crisis.
What is doing well and continues to do well is the mid-cap index. That one is up around 460 points.
Well, it's a quiet day, and that was a day so far, and it's been like that for the bulk of the session. The Nifty is not really doing very much, consolidating. This is Closing Bell, and we are coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Reema and Surabhi here in the studios, and Nigel joining in from the newsroom floor. Guys, hi. Afternoon.
Quiet? What are you saying, Prashant? Where quiet? Look at what's going on the mid-cap and small-cap screen.
I thought you were referring to the birthday cake cutting upstairs.
That too.
But it's true. I mean, if you look at the broader market, it is not quiet. It is, 1%, 1.5%. Rallies is what you have in the broader space, and I mean that part of the market is doing just fine. But for the Nifty, it's down about 45, 50 points. It's been that way without too much change. It's not as if there's been large dip or a large recovery. So just treading water, I guess. Support for the Nifty comes in. I mean, again, because the market's not doing very much, you could look at the 20-day daily averages, but you could also look at the hourly averages, which fall nearer. So 22, roughly 400, 22,391, by the way, about 25, 30 points away is the 20-hourly average. So that's the first kind of support. We've been sort of above the hourly averages for all of the session. Support for the Nifty Bank, again, look at the hourly, which is 47,368. That is the Bank Nifty. Bank Nifty is absolutely flat. I mean, flatter than the Nifty. Mid-caps and small caps doing very well. Advances outnumbering declines by some 3:1. So that's the broader market, which is seeing a bulk of the action. Prima.
Well, when you look at the bank's action, while the Nifty Bank is absolutely flat, HDFC Bank is holding up quite well. So HDFC Bank has a gain of 1%, and that's offsetting the weakness that you have in Kotak Mahindra Bank and ICICI Bank. Both these two are down 1.5%, while Axis Bank too is reeling under pressure. So net-net, the gains in HDFC Bank are offsetting the weakness in the other private sector financials, and that's the reason why the Nifty Bank is absolutely flat. Other notable losers include a Hero MotoCorp posts their sales numbers, Eicher Motors under pressure for the second day in a row, but M&M and Bajaj Auto are in the fast gear. So at least in auto, it posts the monthly sales numbers, investors are being fairly selective.
Yeah, absolutely. I guess a lot of these stocks have run up also. So, it's a careful approach that the street seems to be taking today. But just to go back to the point, absolutely, as Prashant is saying, that the larger cap space is quiet. It's very, very range-bound, and that hasn't changed all through the day. But the mid-cap screen, that's really, really lit, so to speak. There are movers and shakers because of news or brokerage names, and we'll be discussing a lot of these stocks in great detail as we go along. Stock of the day has been Aditya Birla Fashion and Retail. Perhaps, the Aditya Birla Group taking, a leave from the Tata Group, looking at what's happened to Trent and perhaps, some of the own internal thinking. But the talk of restructuring has really put the stock on fire. Then there's Aditya Birla Capital because of favorable brokerage commentary, and we'll get to that also in just a bit. But even, brokerage commentary is lifting stocks like BEL, like Data Patterns. Then there are stocks where business updates have come in, for instance, IRIDA. PSUs are a very strong space once again today. So BEL is one. IRIDA is moving because of the business update. Street seems to be liking it. But even beyond, look at the Tanla platform. Suddenly there's a 11-12% surge that we're noticing today. Tata Investments has gotten into an alliance with the BMW. Rima will tell us more about that as we go along. Reddington is up 5%. So as you can see, I'm almost running out of breath. Short point that the market action is very firmly now it's shifted back to the broader space, and that's where the stock picking seems to be going on. Nigel?
Well, that's right. No, Surbhi, in our morning chat, I had mentioned that the AB Group stocks are going to be in focus today, and I mentioned both of them, AB Capital as well as AB FRL. AB Capital because of that Macquarie note when they're talking about the stock potentially doubling over the next 3 years. And in fact, AB FRL because it's been a rank underperformer. The market capitalization is a sixth of what Trent is at. And now they're doing some course correction. So, both those two have worked out perfectly. Both of them, they're the biggest volume movers today, and that too on the upside. So, a lot of action from the broader markets. On the Nifty Bank, well, it's seen a bit of a, consolidation phase today, but that's going to be the big driver from here on. And I think, we need to move higher. The Nifty Bank needs to make its way to fresh all-time highs. For the final 60 minutes, keep an eye out on the Nifty Financial Services Index because that plays out the weekly expiry. Well, how do you position yourself in the final hour of trade? Mitesh Thakkar joins us to help us out with exactly that. Hi, Mitesh. Good afternoon. What do you make of today's session? It's been stock-specific. Indices are more or less in a consolidated phase.
That's right, Nigel. I think, I've been highlighting the fact that the Nifty has been testing the previous high, but unable to give a decisive move beyond that. So maybe a bit more consolidation is required. Maybe a day or two is required, for the markets to kind of stabilize and then move up. But otherwise, the traction remains on the positive side. So, either buy on dips or wait for 22,530 to be taken out and then take a long trade. Otherwise, take the long bias on stock-specific basis. I have Bajaj Finserv as a buy call with a stop at 1625. Look for targets of roughly around 1710 here. And the other stock is BEL, which I would recommend buying with a stop at 216 for targets of 230.
Okay, all right, got that. Mitesh, thanks very much. We'll come back to you and get some more stock checks going. But let's start off with what else. But as we've been saying, it's probably the stock of the day. Aditya Birla Fashion and Retail is up almost 12% after the company said that it would evaluate the potential demerger of Madura Fashion and Lifestyle business, which owns brands like Louis Philippe, Alan Solly, and American Eagle. There'll be two separate entities, listed entities that will be formed with shareholders getting mirror shareholding in both. Mangalam is here with the details. Mangalam?
Well, ABFRL has announced that they will evaluate a vertical demerger of their businesses into two separate listed entities. As you can see, one would be the Madura Fashion and Lifestyle business. The other one would be the rest of the business. The question we are asking here is if this exercise can actually unlock value. So let's look at this whole exercise and the numbers itself. Now, as per the company's statement to the exchanges, what will each of these businesses hold? Let's start with Madura Fashion and Lifestyle business. It'll hold brands like Louis Philippe, Van Heusen, their underwear business, which is growing extremely fast as well, Alan Solly, Peter England, then a couple of these new businesses like American Eagle, the young businesses Forever 21, and the sports business, which is Reebok as well. This demerges and lists separately. The remaining ABFRL business will hold Pantaloons, their vast growing ethnic wear portfolio, the luxury brands that they have, the bridge to luxury brands as well, and a bunch of digital brands known as Tomorrow. So it appears with this that we can classify these businesses in two parts. One is the value generator, the other one is the growth generator. Why do I call them so? Let's start with Madura Lifestyle and Fashion brands. We have a 5% revenue growth for this business. Large part of the revenue comes in, 6350 odd crores in the first 9 months of this year, with almost 1,000 crores of EBITDA at a margin of 15.5%. Whereas the other business, the fast-growing business, grew at around 21% in the first 9 months of this year with a revenue of around 4,500 crores. Of course, because it's in an investment phase, the margins are a lot lower at around 8% itself. If the current growth rate continues with additional kickers coming in from improved consumer sentiment and business focus as well for the next 2 years, for Madura Garments, which has grown at around 5% for the first 9 months of this year, we can assume a revenue compounding of 10% and an EBITDA compounding of over 12% for the next 2 years. And for AB Fashion and Retail, it's a growth driver and we will see some operating leverage as well, which is why I have assumed 22% revenue growth and 25% EBITDA compounding as well. We end up with roughly 11,000 crore revenue and 1,800 crore EBITDA for the Madura Fashion and Lifestyle business for FY26. Whereas for AB Fashion and Retail, the numbers are close to 10,000 crore on the top line with 800 crore on the EBITDA itself. So big question then is how to value these two entities. I'm looking at comparable numbers for companies like Trent. It would be then prudent to ascribe a huge discount to Trent, which trades at 45 times FY26 EV to EBITDA, and give it similar multiples to players like Arvind Fashions as well, and also given a higher multiple to the AB fashion and retail business, largely because of higher growth prospects. So look at 20x EV to EBITDA for AB fashion and retail and 15x for Madura fashion and lifestyle itself. You end up with an enterprise value of 15,700 crores for AB fashion and retail and 26,600 crores for Madura fashion and lifestyle, which takes the total enterprise value to 42,000 crore as against the 26,000 crores it is at right now. Before jumping to all the conclusions, what are the factors that we should focus on? The first one, what is the exact cash on books post the GIC fund infusion? What the total debt and payables are of the company? 9,300 crore as of September. How will this be split between the two entities? The third one, what is the expected growth capital infusion in ABFRL and the resultant dilution on that? And finally, the path to profitability and growth for both these divisions, how they play out, will be important to see the value that will emerge from this entire exercise.
Thank you, Mangalam, for that comprehensive analysis of the demerger. Deepak Shenoy, founder at Capital Minds, is with us on the show. Deepak, you want to share your thoughts on the exercise that Aditya Birla Fashion is planning to do? And what about the valuation gap between the two entities, Aditya Birla Fashion and Madura Fashion versus Trent? How much of this gap, this yawning gap, can it actually cover?
Hi, I think we've looked at this from a different perspective. There are two things. First of all, the demerger of relatively similar, concepts in the market. It's not, it's just to define premiumization here and try to get a higher value for the relatively more higher margin brands and, try and segregate out the maybe faster growing but lower margin, more commoditized brands at Pantaloons. I think this kind of a restructuring may be interesting overall, provide some kind of unlocking, but I don't know many shareholders who are actually looking for saying, I only want premium brands that are not growing at a considerable pace compared to buying Pantaloons. This has been a result itself, ABFRL itself has been a result of a bunch of mergers, acquisitions, rebranding over a period of time. So now demerging it back again is just adding a layer of confusion into the mix. To me, it's a little bit of a, I think, it's like breaking a window and then making it up, making it up again, and then saying that economic value has been added. But I don't really, think that this is going to be a major thing. But of course, markets will be supreme and they will determine whether the sum of the parts is greater than the whole.
Okay, so that is Aditya Birla Fashion and Retail Street, very excited about the prospects of that demerger and really what lies ahead in terms of value unlocking. Deepak, stay on. It's actually a good day for the Aditya Birla Group. We want to talk about the other stock as well, which is Aditya Birla Capital. But let's just tell our viewers about this Macquarie note. Now, that is the genesis of the interest and the buzz that we're seeing around the stock today. Macquarie has initiated coverage on the stock and, they have a pretty decent price target on it as well. Abhishek is here with the details. Abhishek, they're saying this could be one of the rising NBFCs to watch. What is making Macquarie so optimistic?
Well, it could be the next big diversified NBFC is what Macquarie's note do suggest. So they have initiated coverage on AB Capital with a target price of 230 per share and an outperformance rating that they have given to the stock. It is the top pick amongst NBFCs is what they have said. And they believe that Aditya Birla Capital is poised to show a strong loan growth as well as strong earnings momentum going ahead. So they expect Aditya Birla to deliver an AUM CAGR of about 28% over FY23 to 26, in which they also believe that during this phase, 10 basis point improvement will be seen in ROA. So they are factoring in an ROA of 2.4% for FY26. In the insurance business, they expect 17% value of new business, that is VNB CAGR over FY24 to 26, which is higher than industry average or, their coverage average of about 15% over the next next couple of years. So valuations are subdued with respect to NBFC business being priced at price to book value of just 1.5 times, and the insurance business being priced at 1.5 times price to embedded value. So there is potential for substantial re-rating in the stock is what they believe. Back to you.
Okay, there's been a lot of exercise at the Aditya Birla today. You've got the Vodafone EGM at 3 p.m. where they will consider that fundraise. Hindalco is also planning an IPO. So, there's been a lot of action taking place in the, Birla group. But Deepak, you want to comment particularly on Aditya Birla Capital?
I think, again, this is this company was a result of a complex merger and demerger. There was a company called Aditya Birla Nuo, and I think Grasim, they merged, and somehow AB Capital kind of emerged out of the sidelines in this. It's the holding company of the Aditya Birla AMC and a very tiny little brokerage called Aditya Birla Money, relatively small player, in the space. And then there is the insurance business and the NBFC. The NBFC has always been, relatively low in terms of price to book overall. And I haven't seen the metrics recently, but it wasn't exciting when everybody else was growing. And now is not the time that NBFCs can grow meaningfully given all the RBI restrictions that seem to be coming in place. So I consider that the NBFC growth here will actually not be exciting enough to talk about. The AMC has been okay, but then it's a separately listed entity. So if you want the AMC, you can buy it separately. They do have a housing finance company as well. So the primary interest in this would be in lending. I personally don't think this is going to be worth a lot more. The insurance business, maybe if it makes a meaningful move in, they've done okay. Again, nothing to write home about in terms of numbers just yet on the insurance business. But I don't see any major triggers that would take the stock up. Even when it was demerged, I think 4 years ago, it was at 34,000 odd crores in market cap. Today it's 51,000 crores. Growing up 50% in 4 years is not meaningful compared to the market itself, which has grown a lot more. So I think it's been an underperformer, and I'd like to see some numbers, in the results before I take a call on this. Other analysts may differ, but I don't see this growing meaningfully here.
Okay, all right. Hi, Deepak. Good afternoon. Nigel on this side. Deepak, before we talk about stocks, I believe we've got a newfound talent. Deepak's into dancing as well. So good on you, mate. Hopefully, we're going to see some steps rather soon. But what's been dancing away in this fiscal so far, Deepak, has been the metal stocks. What do you make of them? I mean, it's moving with momentum on hope that China recovers. But your preference out there?
Nothing yet, to be honest, Nigel. I think, metals have this downside of, being cyclical, and maybe the upside also, if you understand the cycles better. I am not a very good player in most of the metal cycles. I particularly gold is doing really well right now as a metal, but I think it's more than that in that context. Here, from a usage context, I think if you look at players in that are benefited from the capex growth, especially in electrical kind of capex, you'd find copper and related companies that make copper would be in favor. I think even the Adani group is getting into that over there. On steel itself, I feel that it's just a matter of time when China comes back and then again floods the market eventually. So it's if anything that happens in steel in terms of steel prices, I would think it's going to be very short-lived, especially this year. After the elections come in both in India and the US, you might see an infrastructure push in both countries that might drive prices ahead in the next year. That is calendar year 2025 and above. But this year, I think primarily some of these will just be momentum stories. I don't see any fundamental growth at least in steel meaningfully.
I thought Nigel was going to ask about dancing. He pivoted to metals.
Yeah.
I'm sorry. Yeah. I heard about metals.
No. The question was metals. No. I thought Nigel was going to say that
Yeah, I was curious
Deepak
which
and his
form.
investors are dancing all the way to the bank.
I know there's some Latin dances and some salsa and getting back to it. Actually, I used to do this 20 years ago, but time to do something that keeps your
Why
feet
not?
in motion.
Absolutely.
Fairly impressive, Deepak.
I'm not very good, honestly. When I'm good, I'll demonstrate.
All right, Deepak, talk to us a little bit about what are you doing? New ideas, new opportunities. Are you finding those or have you sort of redoubled efforts on something that you already own? For example, I think we've spoken about Paytm in the past, right? It's kind of fallen off the radar now after all the action. The other one is IIFL. It's one of those, again, recipients of RBI action. Stocks corrected quite a bit. It was a fast-growing NBFC. From the lows, it's come up about 10% or so. But any thoughts at all?
Yeah, IIFL, I think, is going to see a bit of a hit because of the RBI circular that came out on the 27th, where they've said that if you have sponsored an AIF, because of a loophole in the past circular, if you had sponsored an AIF and that AIF had exposure to something that IIFL had earlier got exposure to, so they transitioned the debt exposure from IIFL Finance to an AIF that IIFL sponsored, that much exposure would not require to be provisioned. Any other exposure as a participant in an AIF would require to be provisioned at 100%. There's a significant amount of money that probably 500-600 crores in the last time we checked that was probably going to have to be provisioned, but was not in the previous quarter. So that will hit their results now. So I'm going to have to see the impact of that on their conference call and how that hits their numbers this quarter, and whether that will have any downstream impact on growth. Otherwise, not so excited. In general, on the NBFC space, I'm not very excited this year at all. Given all the action around both regulatory action and the lack of clarity on when we'll see interest rates come down, I don't see this as a major. You should always take RBI's cues here when they're trying to say slow this down. That means they're going to wait until it really slows down before they change things. So I think that's one thing that I've taken out. But I'm actually quite excited about two things. The power sector, specifically in transformers, we've added a player there. We think that a lot more action is going to come down the road, not just because of electric cars or more usage, but I think in general, the expansion in supply of electricity, the expansion in provisioning of transmission lines, and a general movement towards much larger capex, both from the government-led, NBFCs and then sponsoring the projects downstream, and from solar capacity expansions. All of these are going to result in a lot more demand for transformers at an industrial level. So this will happen over the next 4 or 5 years. So I think although players are expensive right now, I think useful to take a position. There are lots of players, including CG Power in this space. You have to pick your players carefully. There's also the hospitality sector, very excited because you can't get a room anywhere. You can't get a plane ticket to anywhere without paying an arm and a leg. And, sometimes even if you pay arms and legs, you're not going to get anything. So if you look at that I thought it would be a short-term phenomenon post-COVID, but it seems to have lasted. People are willing to pay premium prices. People are willing to travel a lot more than I thought they would be. And I think that's a premiumization of consumption that I think will benefit a lot of companies disproportionately going forward, especially those that are doing capex. We've added a small exposure to Oberoi. We have some exposure to the Indian hotels, the Taj Group. Oberoi is because I think they've started, they're building a hotel on my favorite beach in Goa. So that's just a personal thing that I go with, but also they're expanding their portfolio to 5 or 6 hotels more. They have about 32 odd hotels, but adding 5 more in the next few years is going to give them a capacity push. They are one of the most premium brands here. So premium luxury and specifically in the hospitality sector, very exciting in the next few years.
Deepak, what is Deepak?
Beach?
Yeah, exactly. I was just saying, what is going on today? We're talking salsa, dancing, Goa Beach. I thought I'll talk to you about the Transformers stock, but forget that. Which is the favorite Goa beach you're referring to? I think that's the question on top of mind.
There's a place called Cavalosim. I go there. We drive there every year. It's in the south, relatively. I shouldn't tell anybody about it. No, forget what I said.
Actually, on national television, you are ruining it for yourself. Absolutely. No, okay, just very quickly to complete that point, and I think that's the story that's played out, right? People are willing to pay for premium hotels and premium airfare and travel, whereas they're probably cut back on buying a more premium toothpaste. And that's really the story that's played out in terms of consumption in the market, right? Staples are a complete no-go area. Just quickly, do you see that changing at all? Today, Motilal Oswal put out a note. And it's a big call. They're saying it's time to buy. This underperformance has gone on for too long. They see things changing. But that's one brokerage view. What's your sense on Staples?
Staples will change because of one single factor, elections. Elections is India's largest Robin Hood, the transfer of money from the poor, so from the rich to the poor, from the rural, urban to the village. In villages, people, when they get money, do buy slightly more upgraded toothpaste or slightly more upgraded soap, and of course two-wheelers. So I think those are two areas that should benefit from the election largesse that will come their way. I think that's what's going to drive sales. Urban sales, I don't think there's a lot of demand for more toothpaste or more, and now actually here the competition in urban areas is the Nykas come in with competition at differentiated, very interesting brand levels. People are replacing soap with all sorts of, liquefied stuff and all things that you wouldn't have imagined 10 years back. So I think that way it's the rural change that is going to drive FMCG as a category per se. It may still be a good time, but I don't think it's because people will buy more premium toothpaste in cities. But also we have to remember this. They're very expensive stocks. They're way more expensive than they were 10 or 12 years ago. Just for their earnings to catch up, they'll have to more than double earnings to get to 40 times earnings. So I would say that I'm not excited just because of that. It's like you have an overhang of such a high valuation. You're not going to be able to grow into it even at 12 or 13% per year. And 12 or 13% is when, they'll probably throw parties for 6 months if they get that. So I don't think this is a great sector to be in. There's so many more places where growth of 25, 26% is much more easily visible.
All right, Deepak, we'll leave it there. Thank you very much for your time. Great speaking with you as always here. And, I hope to speak with you soon again. We'll slip into a quick break here. But here's something you must not miss out on CNBC-TV18. CNBC-TV18 will be presenting India Exchange, where market experts and industry stalwarts will be collaborating in insightful discussions on India's economic path and the evolving dynamics for the Indian market. Mapping the macros with City India economy, Samir Chakrabarti. Catch a jugalbandi between market veterans Manish Chokani and Ramdev Agarwal. And of course, return of the animal spirits, a conversation with V. Vaidyanathan of IDFC First Bank, Keki Mistry, Manish Kejriwal of Kedara Capital. And of course, we'll look at markets, chasing alpha. We'll have market experts Nilesh Shah of Kodak, Prashant Khemka of White Oak Capital, and Anish Tavakle of ICICI Pru Mutual Fund. Don't miss, this is on the 4th of April, that is Thursday, 5:30 p.m. onwards.
Welcome back. Indus Stars is down 3% after the big 8-9% gain that it had yesterday. So some profit booking kicking in over there. Bharti Airtel too is down close to about 0.9%. Vodafone Idea is down 3.5%. So the entire telecom basket is on the back foot today. And Zomato, which has had a one-way run, 47% gain since the beginning of the year. Zomato too is a bit subdued today, so not participating in the mid-cap rally. But one of the movers has also been Tata Technology, and this is after the company got into a joint venture with BMW. So the street is excited that though they don't know the size of the deal, they're still excited because BMW is a marquee automotive company globally. And just the scope of the work perhaps can be assessed from the fact that Tata Tech has said they will be staffing 100 employees on this particular JV, which will go up to more than 1,000 eventually. So the understanding is perhaps, or the implication is that the scope of the work is going to expand, and plus it brings down the client concentration risk, the over-dependence on Tata Group companies, in terms of a source of revenue. So that's got the street a bit excited. But M&M Financial is the other one which is surging in trade on the back of its Q4 business update. The numbers just came out, and I think it's the highest ever monthly dispersals. Abhishek joins in with the details. Abhishek.
Well, as you mentioned, the 6,100 crore of March disbursements that they have done is the highest ever monthly disbursements that they have clocked in their operational life. So quarterly disbursements, however, are at 15,270 crore, which is a decline of 1.2% on a sequential basis. So generally, Q4 is a stronger quarter for MMFSL. Collection efficiency for the month of March is at 101% when compared to 105% on a YY basis and about 97% in the previous month that they have had. Quarterly collection efficiency is at 98% when compared to 99% on a YY basis and about 94% on a sequential basis. March, liquidity is strong at 7,650 crores of liquidity that they have versus 7,600 crores that they had in the previous month. Asset book now stands at 1,02,400 crore, which is an increase of more than 24% on a YY basis. Asset quality has improved. Their stage 3 or gross NP ratio has declined to 3.3% when compared to 4% in the previous quarter. Back to you.
Okay, all right, Abhishek, thanks very much for that. That's M&M Financial, stocks up about 3.25%. Amit Gupta is Senior Vice President and Fund Manager at ICICI Securities PMS. He's joining us now. Amit, good to have you with us here. Thanks very much. Let's just get the broad direction out of the way first. Do you think, we've kind of, after about a month and a half, 2 month odd consolidation, slight 3.5% fall, we've started something fresh? Because there is elections also, right, which will kick off. Next week, maybe we will get the manifesto of the parties. Most interesting, of course, markets will be most interested to see what the BJP says and how detailed it is on the economy side, etc. So lots of triggers in that sense. So just wanted your thoughts. What's the roadmap near term, next 1.5, 2 months?
So I think near term, the way the market is, behaving, because a lot of large caps still, I think the juice is there. And that is the reason that market has remained resilient. We have seen some intermediate corrections of 400, 500 points, but that has actually been taken care of. If you see, for example, the energy space, the cement space, the metals, so we feel that they have been consolidating for a while and now they are coming out. And that is the reason actually I think overall Nifty is possibly can remain positive towards not only elections but also towards budget. And I think in the Indian markets, because intermediate corrections are going to be seen in between. And we have seen from 2022 onwards that Indian markets have a tendency of moving towards 5-year average valuations. And if you see in 2022, we had declined from almost 15,000 to 18,000 to 15,000. Then 2023 also the decline happened towards the 5-year average of 18,500 something. This time this 5-year average is placed at 20,000. And that is where I think from the investment perspective, if we have to look beyond, I think this 2024 will have a base around 2,000 levels. Because if you see the EPS of financial year 25, I'm assuming around 1,100. People are also assuming around 1,150. So on 1100, I think 20,000 will give you a price to earning of 18 times, close to 18 times, which becomes a 5-year average. And that is where, if you assume this, then you are ready for some corrections, and then you can place your cards from the large caps to mid cap space and make a good portfolio for yourself. And I think that is also what we are doing.
Okay, all right. Hi, Amit. Good afternoon and good to see you in. Amit, since you briefly mentioned cement, I wanted your view on the stocks. Just to tell our viewers out there, there is a push for a price increase. The last quarter, the pricing was very, very weak. And at the start of any fiscal, we normally see that they try to push through a price increase. However, how much of this price increase is accepted is going to be more crucial. So that's the important point in there. Ahead of an election, and demand needs to be strong enough. Tell us your view, Amit, on the cement companies, and they've underperformed in the last 45 days or so because of this weak pricing. How would you approach them?
In fact, cement had underperformed, previously also in the entire year because they were not able to increase the prices, as you rightly said. And that is the reason your EBITDA per ton also was not coming up. And we saw that, some of the bigger participants, they have kept the prices lower, and that was also eating away the margins actually of these companies. Now we have seen that there are some efforts, possibly after elections, you may see some reversal in the prices in the cement pack. But overall, I think the raw material cost is equally important. Now, recently, we have seen that the crude prices have moved higher to $88 per barrel. I think it looks like it has moved up because of the global growth, revision. But overall, it seems that when UK is going into some recession, and we have seen some recession in Japan also, it is possible the demand factor globally may not be very positive. And when I look at the domestic commodities like cement, I think it is possible that overall you will see that the raw material cost may not be very high for these companies, and that is why the margin can remain in an expansion mode going forward. So these companies are on a good wicket now. They have already spent a lot of time. Volume expansion is the game now, and we have seen that once the output price little bit starts going higher and remains sustainable, because we have seen before also they have rolled back some of the prices. If that does not happen, you will see a more sustainable move in the cement going forward. So I think the time has come now to start looking at some of the stocks in the cement after the long consolidation.
Okay, that's cement. Amit, hi, good afternoon, Surbhi here. So, apparel and retailing were never sectors that were seen as big wealth creators or, major sort of drivers in the market. But then a stock called Trent came along and everything changed. Now, we're seeing what the Aditya Birla Group is doing with its fashion and retailing, apparel retailing business. Just your thoughts. I know you can't get into too much of specific stocks, but still, just what is the approach that you've taken to this space? And do you think Trent was a one of its kind of a phenomena? Or do you think this sector has the potential to re-rate?
So I think one is the brand value. So if you can, because the brand equity, once somebody has made, and then the next question is how you are looking at the cash flows, because it is also possible your input cost is very high. The initial cost is very high. So we saw it in the case of Aditya Birla, before that the other retail companies were participating, but this company was unable to participate actually that time. I think you reach a stage when the discretionary expenditure starts increasing. We have seen currently that the number of rich people actually are increasing, the number of billionaires increasing, income levels are going higher, lifestyle of the people is changing. So there is an upper layer which is ready to spend. I am not talking about the lower the pyramid right now. So this upper layer beneficiaries are going to be, do much better going ahead. So we saw it in Trent. So in Trent, West Side actually was doing better. In fact, in the upper to middle, there is one segment where if you can provide the lifestyle, at a much reasonable rate, then there are takers in the market, and that is what Zudio did in the case of Trent. So I think Aditya Birla also, Pantaloon and all, initially when they took it actually from Big Bazaar, that was the cash cow actually for them, and I think they can do something now. They have already worked upon this. It is possible that some of the retail companies can participate in the coming days. In fact, we have seen some consumer companies recently have started coming up, and I think very selectively we need to go. In fact, we are focusing more on the air conditioning players right now, because going forward in the summer, you will see, more demand coming up for air conditioners. It's a very low penetration in India right now. If you look at the number of ACs, demand in a year in India, it is around 90 lakhs. If you look at in China, it is around 8 crores in a year. So on the same population base, I think there is a big difference for ACs, and that is where I think that segment can also come up.
But, Amit, just to take you up on that, while I completely understand the rationale for looking at ACs, but isn't that, a very seasonal sort of phenomena? Because I remember when we spoke to Mr. Tyagarajan of Blue Star a couple of, weeks and months back, he was speaking about serious competitive intensity in the market. So is this sort of a seasonal trend and maybe you trade it smartly? Or do you see some of these consumer durable companies, AC companies, as also sort of, critical holdings that should be there in the portfolio?
No, you rightly said. So competitive intensity is definitely there. So we have seen the Japanese players, they are dominating this market in the OEM space. And that is where Voltas had lost the market share from 25% to almost 19%. But I think another way out is when there is a bigger scope going forward and you have dealt with your raw material problem, because we saw before the copper prices were also going higher. So after gold, I think copper is the another commodity which has gone higher actually. So they were not able to increase prices because of this. So their margins were also coming under pressure. That problem we saw in the case of Havells when Lloyd was there. And now I think one way, so yes, one thing is there is a bigger room now, as I said, more ACs can be sold, and there is an industrial segment also. When you do a lot of capex, there is more demand actually from the industrial side also can come up. Other thing is to play this segment, you can look at the vendor companies also. So for example, those companies who provide refrigerant gases. So these gases prices were lower because of a lot of destocking from China. But we have seen the case that there is some bottoming coming out for these prices. And that is where I think some of the vendor companies can start participating from this front. SRF is one good example from the vendor segment.
Okay, all right. Good to have you, Amit. Thanks a lot for joining in and giving us all of those details. For the time being, though, we'll slip into the short break with news that the Nifty actions recovered quite a bit from the day's low. The mid-caps continue to remain on fire. On the other side, Nimesh will be standing by to fill us in with D-Street chatter. We'll also get you some technical calls. Welcome back. You're tuned into Closing Bell. Just one quick point on the cement companies. Some of them are seeing a spike up because there are reports that suggest that maybe there's a proposal to push through a price increase. But just to tell our viewers, the crucial part will be to see how much of that is accepted, particularly ahead of an election year. So just keep that in mind. The push has come through. The prices have been very, very weak, but how much is accepted is important. Dalmia Cement, the stocks saw a big spike up. They have exposure to South as well as East India, where pricing was the weakest over there. And now there will be some kind of a rebound, but how much is accepted? And you see from the high of the day, in fact, the stock has given up a little bit. So just keep that in mind. But it's that time of the day when, in fact, we get Nimesh to tell us about what's going on in dealing rooms. Nimesh, tell us more.
Hi, Nigel. As we discussed yesterday, this could be the series for the broader markets. Yes. And it turns out for the second day running, the broader markets are outperforming. The mid-cap index is up 1%. And there is genuine traction as well in terms of buying interest back from retail and large HNI investors. So that's one space which has done well today. Again, from a flow perspective, it's again quite muted. Very, very selective is what I understand. There is a small MOC buying, but it's very, very selective. So not like, again, you're going to see a very large FI or a DI number in today's market. From a sector point of view, for second day running, metals are doing well. The index is at 1%. And again, this is something we discussed yesterday that maybe a lot of investors are betting on that metal could be the index for this series. So there is a bit of interest as well from larger FIs to bid into metal names. And it looks like the leadership could be back in the PSU sector stock. So again, this is backed by some institutional buying as well. A lot of the PSU stocks have seen some bit of buying traction in today's market. So PSU is doing good, metals are doing good, but looks like the first part of the series could be largely for the broader market stocks.
All right, and in fact, they're doing very, very well in the first couple of days. But Nimesh, what about individual stocks? What are you picking up?
Right, so in terms of individual names, the first stock is Shami Hotels. There was a large block today. The stock has recovered from the lows, but again, it's been under pressure. Nearly 2 crore shares, which is close to 8% equity got changed hands. I understand it's a clean out trade from an FI investor, so disclosures could be interesting there. The second name is Superior Life. That's been buzzing in trade today and good volumes as well. The stock is up 3%. It's been seeing some bit of traction as well. And I understand a leading domestic mutual fund is an active buyer in Superior Life of late. So that's the buzz there. The third name is Tata Steel. We keep talking about the metal names, but Tata Steel stands out on the back of strong buying interest. In fact, I understand a leading long-only fund has been an active buyer in Tata Steel of late. So maybe in the shareholders list, you will see the large FI holder name in the new shareholding pattern. So that's something to track in Tata Steel. And the last is Rainbow Medical. The stock was up 5% yesterday. It's buzzing in the last few days. And there is a bit of buying interest back. So for the second day running, I understand there will be very strong delivery-based buying in Rainbow Medical.
Nimesh, stay there. India Bulls, I just want to put up India Bulls real estate. That's a sharp spike, right? I mean, it was at about 118, 117 rupees and moved up to 125. That's a 6.5 rupee pop coming through. Now, this is another name which found its way into D Street chatter. This was, I think, about a week ago or so. Nimesh, you want to just refresh our memories?
So again, Prashant, as I had highlighted a week back, that there is a very high chance that there could be a fundraising very soon. So I understand a couple of marquee domestic mutual funds, some large HNI investors, and the existing shareholders are likely to put money via pref issue. So it's been in the works for a while now, and maybe this could come very soon. So that's been an indication that potentially before the lockup ends, before the earnings season, you could see that potential fundraising from large investors very soon. And maybe that explains a bit of move in today's market.
Okay, all right. Thanks very much, Nimesh, for that. So that's an interesting list of stocks that we are watching out for. By the way, the market is now absolutely in the flat terrain. It's recovered quite sharply. And let me just tell you, from the time that we started the show, I think there's been a decent recovery. 22,400 around is where we started. We're up about 50 points from when we started, 230, the closing bell that is. Well, Mitesh is with us with what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, what's on your list?
So I think, while the indices have kind of been quiet, the breadth of the broader market is enjoying and seeing good momentum and follow through on the breakout trades. So I have all buy calls, and during the day also we had buy calls. So right now, GNFC is a BTST with a stop at about 652 for targets of roughly around 670, and Godrej Property is the other one. Keep a stop below 2484 and a target of 2535 can be looked at.
Okay, thank you very much for that. Let's move on now to Upasana. She joins in with to throw some light on the defense stocks. BEL and data patterns are buzzing on the back of a bullish brokerage note. Upasana, fill us in.
Firstly, let me start with BEL. The company has reported its FY24 operational numbers, and FY24 sales turnover stands at around 19,700 crores versus the 20,000 crore guidance given by the company earlier. On a Y&Y basis, the turnover is up almost about 13.6%. Now, UBS has given a buy rating on this stock with a target price of 257. It says that the FY24 sales guidance was missed, but new orders are up almost 74% on YoY basis. Well, the order book of the company stands at 76,000 crores and 2-year order guidance is almost 5 lakh crores, which looks conservative. Well, the stable supply chain dynamics coupled with working capital cycle and closure of large ticket orders in FY25 remain the key triggers to the continued outperformance of the stock, is what the brokerage has indicated. Now, moving forward, Jefferies has also written a note on defense companies. It has initiated a buy rating on data patterns with a target price of 3,545 and a buy rating on BEL as well with a target price of 260. Well, it says that the global geopolitical situation has improved and India's rising focus on self-reliance is fueling order inflow and revenue growth for domestic defense companies. Government's focus on building country-to-country relations is likely to promote exports as the icing on the cake. Now, 2x growth is seen in domestic defense spends from FY24 to FY30, and this should continue to drive the stock's upside, is what the brokerage has indicated.
Okay, thank you very much for that. Let's slip into a break. On the other side, we'll invite Jay Bala of cashthekiosk.com. Stay tuned.
Welcome back. Well, the theme really is in the broader markets. A lot of stocks are buzzing around out there. So let's get straight to Jay Bala of cashthekiosk.com, who joins us on the show. Hi, Jay. Good afternoon and good to see you. And this is the first time we are speaking to you in this fiscal, just 2 days into it. But it's a stock-specific market, right? So let's talk about the indices later. Let's talk about stocks first. What are the ideas you have for us?
That's right, Nigel. And wish your traders a happy new financial year. And, I'm bullish on one name that's in the pharma space, About India. The structure from February's decline is a corrective decline. So the recent low of 26,400 is likely to hold for the stock, and expecting About India to hit fresh 52-week high close to about 31,000 to 32,000. Large size stock, so position size your bets accordingly. The second one is I'm bearish on Kotak Mahindra Bank, and it's one of the weakest back in the medium term, it's returned 0% in the last 3 years. So it's got a very huge pattern that's been developing for several months now. So I think that might be under play. So a stop above 1820, the recent high, and an objective first towards 1630. If 1630 were to break, I'm expecting the stock to drop to 1000. So this may not happen immediately. This might play out over several months, but the immediate objective is about 1630.
Okay, well, that's the take on Kotak Mahindra Bank. Jay, hi, good afternoon. For the Nifty, I mean, let's just talk levels and what you're seeing right now, because while the broader market is healing, it's recovering, the headline index seems to have stalled at the all-time high level. So do you see more time consolidation here? Anything specific you're picking up?
Hi, Sulvina. We discussed the ending diagonal pattern 2 Tuesdays ago, and I had mentioned that until the markets hold about 21,530, this pattern might still continue to clock higher highs. So that's what it exactly did as today. Although it printed new all-time high, the move is a limiting move. So that's the reason why this market isn't able to push ahead across. Usually fresh highs have follow-throughs, and because this is a limiting structure, the market isn't able to proceed ahead. So I'm anticipating the markets to first drop towards 22,300 and then clock fresh highs towards 22,720, maybe even 22,830. So basically the structure that you need to watch out for is a pullback, first a pullback, then fresh 52-week highs, and that's what I'm playing for. And important supports are at 21,710 and 21,530. As long as the market stays about 21,710, I think fresh 52-week highs are coming.
What about Bajaj Auto in particular? It continues to go up and away.
Yeah, Bajaj Auto, I've been bullish on all three, two-wheeler names, Bajaj, TVS, and Hero. But of these three, Bajaj is the strongest at the moment, and TVS is actually trying to taper off and starting to weaken. But I think Bajaj would also join the other two names sooner than later. But it's got little more upsides to work with. But this is not something for fresh buying. It's for people who are already long in it. They need to trail with a stop loss at about 8,700. I think it's got potential to about 9,800.
What about banks and the Nifty Bank? What are the levels there, Jay?
Yeah, the Nifty Bank is stuck between the range of 45,600 and 48,150. And there is no significant movement, but there are pockets of private sector banks which are starting to weaken. One I've already mentioned, Kotak Mahindra. ICICI is another one. So watch out for this. But as long as it's contained above 45,600, this range movement is likely to continue.
All right, Jay, I want to know particularly about HDFC Bank. The big event is going to be whether or not the FI ownership reduces. If that's the case, it gets included in a global index, and then we could see inflows. Technically, though, how that's looking?
Yeah, I think HDFC Bank is in a medium to long-term correction. So that's the reason why it's also a ranked underperformer from the frontline names, along with HUL and Kotak Mahindra. So the short-term movement is about, it got resistance to come about 1520 to 1540. I don't think any bump up will exceed that. But the medium-term trend will start to break down once the other leaders like SBI, drops below 700. Until that point, this can see a ranged movement.
I just want to point out that this day has been all about mid-caps, and even as we're getting into close last 5 minutes, there are so many names that are holding on to gains or actually building on gains. I'll just name some. Look at CAMS. 6.5% higher. There is Bikaji Foods, about 7% higher. Tanla, we'd mentioned earlier. Something like Godfrey Phillips, 8-9% up on Godfrey. So it's a very vibrant looking screen on mid and small caps. Lots of those names are bouncing around. Jay, since the market seems to have found its love affair back with mid and small caps, any interesting charts, anything that's coming up on your screen you'd like to talk about?
I think Godfrey Phillips that you have spoken about, I've been bullish on it for several years now. It's been one of my long-term favorites, but it's still got upsides to contend with. It's probably heading towards 4,000, 4,200. But most of these names have very skewed risk rewards. The stop placements are quite wide, so that's the reason why I avoid. And I think it's more to do with mid caps than with small and micro caps. The mid caps have one final higher high to complete, and then that will also start to turn. But whereas, I see the movements in micro caps and small caps more like a counter trend bounce rather than a fresh 52-week highs process. So more caution there, but but some pockets of opportunity still exist there.
I've got Linde India, just adding one more name to that list. Linde is surging as we're getting into close, 8% higher on Linde India. So just one more name, a very buoyant mid-cap screen today.
What about Zomato? Do you see a lot of upside in Zomato, Jay? The stock is up 48% this year. In the last 1 year, it's gone up to 50%.
Yeah, it's still got a little bit upsides to work with, probably, in the short term, not in the medium term. I would be very cautious about this move because, it's had a breakout in last year from about 60 and now it's come to 180. So, it's tripled from that point. So the price structure from the recent low in March points to one final high, but it's seeing an exhaustion in momentum. So, it's an avoid for me at this point in time.
All right, Jay, we'll leave it there. By the way, so you said if 21,700, which is the low, the recent low doesn't break, fresh highs are coming. Extending to what, in your opinion, Jay?
Yeah, like I pointed out, Prashant, it's 22,720 to 22,800. This is not an expanding move, so you're not likely to get a massive thrust. That's the price structure I'm looking. Remember, we spoke about the ending diagonal, and I highlighted the probability of having final components to work with. It's still continuing that structure. The most important factor we haven't spoken about is because of lack of time. Crude is breaking out. We're already at 89. Dollar index already broken out. There are a lot of macro headwinds that's coming up for this market. So be very cautious. For the higher highs to come through, levels are 22,720 and 22,830, but it's not an expanding move.
Fair enough. We'll keep a track and have you back as we track markets over the next coming weeks as well. We got absolutely, it's like a traffic signal, right? Green and blinking green and red now. But which also means that we have recovered 50 points over the last 60 minutes on closing bell. So this is a flat close and a very good close because broader markets were doing very well and they will end in a very good fashion. Mid-cap index will end 1% higher and you got the small-cap index which will end about 1.25% in the green. So outperformance there, market breadth pretty solid and Nifty recovering very nicely in the last 60 minutes. So very little to really complain about what we saw today. Surbhi.
Absolutely. Well, as far as the large cap indices are concerned, absolute flat end to the day. But as we've been saying, it's been all about the move beyond the Nifty stocks today. Even the bigger names, look at something like Oil India, SAIL, a lot of the PSUs have been very, very buoyant. 5-6% up on these names. SJVN is up 5.5%. So there's one thing the market's telling us today is that the PSU party isn't over by any stretch. It's well and truly alive and thriving. Then some newsmakers today. Tata Investments on the tie-up with BMW, 5% higher. Aditya Birla Fashion and Retail, of course, the stock of the day with the vertical split happening between its two businesses, Madura being hived off, 12% on that stock. Let's take a look at some other newsmakers. Uflex, which has started a new production line. Data Patterns and BEL benefiting from positive brokerage commentary today. M&M Financial, 3.5% higher. The quarterly update came in. March has been a very good, solid month for the company. And the street like that. So plenty of names on the upside. Just to point out, not too many losers to speak of. Vodafone Idea, let's see if anything concrete comes out from that fundraising, discussion that's supposed to take place at the board meeting. 4.5% down on Vodafone Idea. That was the one noticeable loser. But otherwise, big day of gainers today. The advance decline ratio very strong. Over 1,800 stocks advancing. Just about 500 stocks on the declining side. Well, with that, it's a wrap. Curtains on this edition of Closing Bell. Thank you very much for watching. But don't go anywhere. Markets Forward will take the action ahead.